Hello and welcome to Trading Hour. We are live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Reema Tendulkar and Hormis Patakia. Hey guys, good morning. Well, some profit booking which is on the cards. We are so far snapping that 4-day winning streak. Nifty is below the 25,100 mark for now. But Nifty IT, that is bucking the trend for now. Earnings continue to remain in focus. We are at the day's low as we speak on the Nifty. And there are some exclusive flashes running for you at the bottom of your screen. It is related to Tata Group, narrative of coup being painted by some trustees. This is, of course, an exclusive news break that we are getting. There are differences of opinion on certain decisions, including equity infusion into Tata International. We'll get in, Shireen, in just a bit with more details and the details as far as this important Tata Group news is concerned as well. But yes, for now, markets at the day's low.
But this Tata is the big story and what's happening internally over there. But the other one is the IT stocks, right? You spoke about it, bucking the trend. And the Nifty IT index has gained about 3.5%. Remember, earnings kicks off tomorrow officially with TCS and Tata Elxsi. But the following week, we have Infosys, HCL Tech, Wipro, LTI Mindtree, Persistent and LTTS. So the entire picture will be clear. But just going by the initial numbers, if you look at TCS, for instance, what it's telling us is that maybe the earnings downgrade cycle could be coming to an end. So TCS reported 2 consecutive quarters of a revenue decline, Q3 and Q4. This quarter, we're expecting no growth or a modest 0.2% growth. So maybe that fall is now getting arrested now, and the hope is that maybe at some point things will recover. Right? And I think that is something that's priced in because of the kind of underperformance. Year to date, the Nifty IT index was down close to about 25% underperformance versus the Nifty. So I guess at lower levels, people are saying that maybe demand deterioration may not be there right now. And you can see a lot of buying coming through in many IT names. And even Tata Elxsi is up ahead of numbers tomorrow. But let's put the spotlight on other stocks. Hormis has now moved over to the big wall. Hormis.
The markets have cooled off from the highs, but then look at stock-specific activity in the broader markets. And IFCI is a PSU name. We're highlighting 2 PSUs in today's list. This one too is slightly off the highs of the day. At one point was up 7.5%, snapped a 2-day losing streak. But take a look at the volumes here. We've had over 2.5 crore shares that have already been traded in the first couple of hours of the trading session. The 20-day average here is just 35 lakh. And the stock is now trading above its 50-day, 100-day moving average of 58.5. So trading above an important level. Government shareholding here is 72%. And it's still an underperformer this year despite this move, down around 4% on a year-to-date basis. But this is after the stock had doubled in 2024 and in 2023 as well. Now, Salzer Electronics is among the top gainers on the small cap index today, still holding on to gains of around 14%. The biggest single-day gain since February of last year. It also snapped a 2-day losing streak today. And just within the first 2 hours of trade, today's volumes are already the highest since May of 2023. And we have had over 18 lakh shares that have been traded on the stock. The 20-day average here is only 14,000 shares, and the stock is broken above its 50 DMA at 822 and now is at its 100-day moving average, which is at 869, and has been an underperformer all through the year. It's down around 40%, and October is the one month that it has turned positive, and the only other month when the stock has gained has been March. One more on the list today is Pondy Oxides and Chemicals. The stock around about 8.5% higher now. The stock has gained in 4 out of the last 5 trading sessions. We have had over 10 lakh shares being traded, 20-day average being 2 lakh shares, trading above all of its key moving averages as well. And interestingly, this stock is part of the Diwali picks highlighted by SBI Securities, where its price target is projecting an upside of over 23%, and as a result of which the stock is doing well in today's session. And the other PSU on the list today is ITI. Is the 6th straight day of gains for the stock, 11% higher today. The last 6 sessions, the stock has gained 20%. The volumes already are the highest since December of last year. We have had over 2.5 crore shares that have been traded so far. The 20-day average is only 4 lakh shares. And of course, this is also one of the few low free float names. The government has a 90% stake in the company, and a special national investment fund has another 8%. So the free float in the market is very negligible. Yet the stock doing well for itself. ITI 11% higher today.
All right, so these are some stocks that are bucking the trend because now the fall has actually worsened and the Nifty is down 50 points as we speak at the day's low, and that's the case with the mid caps as well. But you know, one sector which is in focus, that's the banking space after RBI's credit provisioning guidelines and RBI's draft on credit risk capital framework. They've been out. Gaurav is joining us with more details on this. Gaurav.
Well, yes, RBI has shared guidelines for two segments. First is that ECL, which is expected credit loss, and second is the risk weights. First, let's talk about the expected credit loss segment, where they have made a few changes. And a key change is that they have now added new classifications, which will be stage 1, stage 2 and stage 3. Stage 1 will be performing, stage 2 will be significant increase in credit risk. Remember, RBI is now adding more than 60 days past due threshold for this stage 2 now. And for stage 3, it is credit impairment or NPA, as we knew earlier. Now, what RBI is saying is that banks will need to have 3 key factors for the calculation. First is that probability of default, then loss given default and exposure at default. Other than that, they have also made a few changes to ECL requirements. For stage 1, ECL requirements will be in the range of 0.25 to 1.25%. For stage 2, it will be anywhere between 1.5 to 5%. And for stage 3, it will be between 25 to 100% based on the asset quality of the loan. Apart from that, now Motilal Oswal, they believe that it is going to be positive for big banks like ICICI, HDFC and Axis Bank because they have more of a secured portfolio and also have cushion. At the same time, they see limited impact to PSBs and banks with elevated unsecured exposure. Now, there we may see a bit of increase in the overall provisions. Now, but remember, this will be applicable from 1st April of 2027 and this will be available till FY32. So there is enough time for banks to adopt this. When we talk about the risk weights, there also they have made a few changes, and the key ones are that in real estate, they have reduced the risk weight for the housing loans, individual housing loans, to around 20 to 40%. This will be actually positive for affordable housing segment because it will free up some capital. Other than that, in the personal loan and credit card segment, the key thing to highlight here is that they have lowered the risk of transactor category of the credit card. Now remember, Motilal Oswal, they say that it is actually positive for credit card players because most of them are having high base of transactor of around 55 to 65%. In fact, now Macquarie, they are also saying that this will be positive for SBI cards because it will release around 450 basis point of capital for the company. They also believe that the risk weight changes are going to be positive for the power financiers, and within banks, because of the ECL changes, they believe that HDFC and ICICI, they are amongst the few players who are at a better position because they have around 100 to 130 basis point of excess provision which can act as a cushion. So definitely brokerages are going positive. When we look at the stock performance, it is not reacting right now, but at the same time we will definitely watch out on the banks as well as NBFCs from here on.
Thank you very much for that. We will slip into a break. We'll come back with more on the market. Stay tuned. Welcome back. Let's get to the big CNBC TV18 exclusive and the one that we've been tracking, the power struggle, the internal discord at the Tata Group. Shireen is now joining in with the latest that she's learned from her sources. Shireen.
Well, thanks very much. As you correctly pointed out, there is a power struggle on, but what we're given to understand is that unlike what we've been hearing from one side of the trustees, that there is an alleged attempt at a coup, the other side believes that this is not about usurping power, it is not about control, it is about differences of opinion. Now, what we're given to understand is that there have been 3 crucial flashpoints that have led to this escalation, the current escalation that has now reached the doors of the government as well. One has to do with equity infusion that Tata International sought from Tata Sons. Now, Tata International is a company that is chaired by Noel Tata. It has apparently an unsustainable debt of over 2,000 crore rupees. This was as per the presentation that our sources say was presented to the Tata Sons in September of this year. And an equity infusion was sought. An equity infusion finally of 1,000 crores was cleared. But there were concerns raised about the need for this equity infusion and also about the losses itself. So that has been one point of contention. Some of the trustees on Tata Trust believe that there wasn't material disclosure with respect to what was actually going on at Tata International and the need for this equity infusion. One of the other aspects, apparently, that has also led to heightened tensions is a proposal that was allegedly being mooted by Noel Tata to have a deputy MD appointed as well. Remember, there is no such position at this point in time. This was something that was being proposed by Noel Tata, is what our sources are given to explain to us. But this was one of the other flashpoints that has led to differences of opinion and differences emerging within the group. And finally, the third point of contention really has to do with Merely Mistri's appointment to the Tata Sons board. Now, Merely Mistri's appointment was opposed by Noel Tata, and this is something that has also led to a further worsening of the relationship within trustees on the Tata Trust board. So these are some of the key flashpoints that have led to the current escalation, is what I'm given to understand. If we piece together what has happened in the past year, the differences have been creeping up in the past year. Remember, Noel Tata took over as the chairman of the Tata Trust on the 10th of October. But what we're also being told is that, look, there was all trustees, including Merely Mistry, Darius Kambata, Pramit Javeri, and Jahangir, who now allegedly sources as close to the Noel Tata side suggest are opposed to Noel Tata. They had all voted in favor of his appointment as the chairman of Tata Trust. So the important thing to also highlight to our viewers that the October 10th board meeting of the Tata Trust will not take up any of these issues. So if there was any expectation that something related to the current discord would be taken up on the 10th of October, that is not the case. What is going to be taken up, what is on the agenda of the October 10th meeting, are philanthropic activities amounting to about 1,000 crore rupees that will need to be signed off by the trust, by the trustees. So that is what is up for discussion and debate. Nothing pertaining to the current tensions and discord on the agenda as far as the October 10th meeting is concerned. Now, with the government getting involved, and as you pointed out, there was a meeting that took place yesterday. 4 members from the trust side, Venu Srinivasa, Noel Tata, Darius Kambata, and of course the Tata Sons chairman, N. Chandrasekharan, were part of that meeting that was held at the Home Minister's residence. The Finance Minister was also part of that meeting. The hope is that there will now be a de-escalation, that both sides will try and arrive at some sort of a rapprochement. That certainly is the hope and the expectation, but one will have to see how all of this plays out. But this is where things currently stand, and this is what has led to the deterioration of relationships, these crucial flashpoints that have emerged in the past year that have led to this impasse today.
All right, Shireen, thank you so much for joining us with all those details and the clarification on the upcoming board meet as well. So we'll keep getting you more updates on this developing story. But let's move on. The Secretary at the Ministry of Statistics, Saurabh Garg, says the rollout of the new base years for national accounts, inflation and industrial production are on track. Speaking to Sapna Das, Garg provided a timeline on when the data will be released with 2024 as the base year. Also spoke about adding more items to the inflation basket to make the data more robust.
The price, the CPI, the price inflation index, that will be with the base of 2024. That's when we have collected all the prices. And that will be released for the month of January. It will get released on the 12th of February. So, but from January onwards, the new series would be in operation. And the index for industrial production, that too would be with the base year of 22-23. That would be released for the month of April 26. It will get released in May 26. So we are increasing the number of markets also that we are covering.
Tapping.
So the number of markets would increase, the number of products would increase, and obviously the types of markets from where we are getting the data, that would also change. There has been an increased expenditure of people towards vegetables and fruits, and there is a reduction in expenditure to cereals. So that, if the household consumption basket has changed, and that is a reflection of the increased expenditure, total consumption expenditure, which has nearly doubled from the previous. So therefore the incomes are rising, and that gets reflected in the type of consumption of food items. The statistics offices focus on headline inflation. Apart from that, you might have seen, we also bring out sector-wise inflation. What is the inflation for food items? What is the inflation in health? What is the inflation in different sectors? Education, others, and that we will continue to bring out, because that gives the sectoral idea also what is happening in each sector. Regarding core inflation, that is an area where there is no unanimity on what all should be included in core inflation. And that is more an activity which is done by the central banks, the Reserve Bank in our case. So we will stick to the mandate which is there of the Ministry of Statistics. Even now, you have different forecasters, different agencies giving their estimates of core inflation based on the definitions that they are more comfortable with that. We are not getting into that debate.
The markets, though, extending their losses now. 70 points down on the index is nearly 200-point fall now from the highs of the day of 25,192. So at the lowest point of the day on the Nifty as we speak. Take a short break. More on the markets on the other side. We'll also be joined by Sneha Seth for a quick chart check from Angel One. Stay tuned.
इंडिजीनियस टेक्नोलॉजीज का डेवलपमेंट और स्केलिंग हो, R&D के जरिए इंटेलेक्चुअल प्रॉपर्टी क्रिएट करना हो, ग्लोबल स्टैंडर्ड्स के डेवलपमेंट में कंट्रीब्यूट करना हो, भारत हर आयाम में आगे बढ़ रहा है। इन्हीं प्रयासों का परिणाम है कि आज भारत एक इफेक्टिव प्लेटफॉर्म बनकर उभरा है। साथियों, इंडिया मोबाइल कांग्रेस और टेलीकॉम सेक्टर में भारत की सफलता आत्मनिर्भर भारत के विजन की ताकत को बताता है। आप याद करिए, मैंने जब मेक इन इंडिया की बात कही थी तो कुछ लोग कैसे इसका मजाक उड़ाते थे। शक संदेह में जीने वाले लोग कहते थे कि भारत टेक्नोलॉजिकली एडवांस चीजें कैसे बनाएगा, क्योंकि उनके दौर में नई टेक्नोलॉजी को भारत तक आने में कई दशक लग जाते थे। देश ने उसका जवाब दिया। जो देश कभी 2G को लेकर स्ट्रगल करता था, आज उसी देश के लगभग हर जिले में 5G पहुंच चुका है। हमारा इलेक्ट्रॉनिक्स प्रोडक्शन 2040 की तुलना में 6 टाइम बढ़ चुका है। मोबाइल फोन मैन्युफैक्चरिंग में 28 टाइम्स और एक्सपोर्ट में 127 टाइम्स की वृद्धि हुई है। पिछले एक दशक में मोबाइल फोन मैन्युफैक्चरिंग सेक्टर ने लाखों डायरेक्ट जॉब्स क्रिएट की हैं। अभी हाल ही में एक बड़ी स्मार्टफोन कंपनी का डेटा सामने आया है। आज 45 भारतीय कंपनियां उस एक बड़ी कंपनी की सप्लाई चेन से जुड़ी हैं। इससे करीब 3.5 लाख रोजगार देश में पैदा हुए हैं। और ये केवल एक कंपनी का आंकड़ा नहीं है। आज देश में कितनी ही कंपनियां बड़े स्केल पर मैन्युफैक्चरिंग कर रही है। इसमें अगर इनडायरेक्ट अपॉर्चुनिटीज को जोड़ दें तो हम कल्पना कर सकते हैं कि रोजगार का ये नंबर कितना बड़ा बन जाता है। साथियों, कुछ दिन पहले ही भारत ने अपना मेड इन इंडिया 4G स्टैक लॉन्च किया है। ये देश की बड़ी स्वदेशी उपलब्धि है। अब भारत दुनिया के उन 5 देशों की लिस्ट में आ गया है जिनके पास ये सामर्थ्य है। ये डिजिटल सेल्फ रिलायंस की दिशा में, टेक्नोलॉजिकल इंडिपेंडेंस की दिशा में देश का एक बड़ा कदम है। इंडिजीनियस 4G एंड 5G स्टैक के जरिए हम न केवल सीमलेस कनेक्टिविटी को सुनिश्चित कर पाएंगे, बल्कि देशवासियों को तेज इंटरनेट और रिलायबल सर्विसेज भी दे पाएंगे। इसी मकसद से जिस दिन हमने अपना मेड इन इंडिया 4G स्टैक लॉन्च किया, उसी दिन देश में एक साथ करीब 1 लाख 4G टावर्स को भी एक्टिव किया गया। दुनिया के कुछ देशों को 1 लाख टावर की बात करते हैं तो भी उनको अजूबा लगता है। ये आंकड़े बहुत बड़े लगते हैं लोगों को। इसके कारण एक साथ 2 करोड़ से ज्यादा लोग देश की डिजिटल मूवमेंट का हिस्सा बने हैं। इसमें कई ऐसे इलाके थे जो रिमोट एरिया में थे, जो डिजिटल कनेक्टिविटी में पीछे छूट गए थे। अब ऐसे सभी क्षेत्रों में इंटरनेट कनेक्टिविटी पहुंची है। साथियों, भारत के मेड इन इंडिया 4G स्टैक की एक और विशेषता है। हमारा 4G स्टैक एक्सपोर्ट रेडी भी है। यानी ये भारत की बिजनेस आउटरीच का माध्यम भी बनेगा। इससे 2030 के भारत यानी भारत 6G विजन को पूरा करने में भी मदद मिलेगी।
All right, that's the word coming in from Prime Minister Narendra Modi at India Mobile Congress. But there's so much happening, so let's go across to the SBI Chairman, C.S. Setty, speaking at the Global FinTech Fest 2025.
Thank you so much for that. I have with me Mr. C.S. Setty, Chairman, State Bank of India. Sir, thank you. As always, it's a pleasure to have you with us, and thank you for taking the time out. If I may begin, sir, with the expected credit loss guidelines finally out from the Reserve Bank of India last night. Broadly, is it on expected lines? And some of the changes, especially when it comes to stage 2 assets, are quite different from what banks are doing on special mention accounts at the moment. What will be the impact? What is your initial assessment?
The ECL guidelines are broadly as we expected. Of course, in fact, there are the draft guidelines also I had mentioned in terms of increased provision requirement for stage 2 assets. Yes. Stage 1, stage 2 concept anyway is there in the non-banking finance companies, right? Yeah. They move to IFRS. Yeah. This ECL guidelines broadly aligns with the IFRS 9 requirements. And there are a lot of nuances there in the kind of risk weights what we have to follow, various categories of loans. Yeah. We would be evaluating that. I think it just released late last night. Yeah. So one important thing we need to remember is that there are a long transition period.
5 years.
5 years. And also banks like SBI, based on the draft guidelines itself, we have put the technology, our models, PD, LGD, and risk assessment models in place. So the transition should be smooth, both in terms of the adoption of models as well as managing the balance sheet impact. I believe there will be a limited impact on the bank's balance sheets.
But that said, for stage 2 assets in particular, at the moment, the comparable SMA2, banks are only providing about 40 basis points. Now RBI is talking about 1.5 to 5% kind of provisioning. How much additional capital do you think you'll have to step up, keeping in mind how large the SMA book for you currently is? And of course, in future to take care of that requirement.
We haven't assessed yet in terms of the real impact of this. But I broadly feel that the couple of things what it expects is that recognize wherever there is some risk there, and then you provide for it. While we have done proactive provisioning for SME loans, for instance, during COVID we were expected to make 5%, 10%, but we went ahead and made 35% provision. So some of us have been proactive in terms of making provisions on SMA category loans too, but this will structurally, alter the way we look at, more importantly, in terms of managing the SMA accounts, and strengthen our collection mechanism, ensure that an account doesn't move into the 60-day DPD. So it also calls for institutional capability to create a very strong collection mechanism in the banks.
So on the Basel III framework, again, risk weights, there have been changes across the board. If you talk about real estate for affordable retail housing loans, the risk weights have been reduced. For commercial, they've been increased. For MSME, they've been reduced. For better rated NBFCs, again, they've come down. And credit cards, what kind of credit this could unlock, and how much additional capital will there be for you to lend to these sectors?
The credit capital constraint was never there. I think most of the banks are well capitalized to support the credit growth. But this is a very welcome step. In fact, all over the globe, the risk weights on the secured loans, which have happened in terms of the LTV-based risk weights which have been prescribed on the real estate loans, particularly on the residential mortgages, I believe that we had one of the highest capital allocation for our residential mortgages across the countries. So that has been now, I think, is aligned to global practices. This is a very good move because I think most of us have very significant residential mortgage portfolio now. And it also recognizes the risk element in a commercial real estate. So while the CRE portfolio when compared to the residential mortgage is limited, but I think this differential approach was required. And in terms of MSMEs, again, I think a lot of capital will be released in terms of, otherwise it was a uniform, most of the loans used to attract 100% risk weight. There's a 80%, it's 80%. So, and that's definitely a positive. So it's the ECL and the whole risk weights, Basel III norms have to be looked in holistically and have to assess the overall impact.
Okay, so in that sense then, given all of these measures plus the various reforms announced by the Reserve Bank on the 1st of October, you think you could meaningfully revise upward your credit growth guidance? I know we keep asking you this, but there are more and more of these new measures coming in every day that we speak. You think there could be a meaningful uptick?
No, definitely. I think a lot of this, I called in one of your shows that these announcements are, I call them as banking reforms 3.0. And these reforms are, for a long-standing demands from the banking industry and very proactively addressed by the RBI. I believe that they're absolutely credit accretive. If you really want me to put a number, I said that 1 to 2% credit uptick. Additionally, what
over and above
12% is what for the industry, not necessarily for SBI. I am very, very positive on that count.
And so, capital financing, you've welcomed the move, and I know you personally had presented this proposal as well from IBA to the Reserve Bank of India, and now it has been accepted. But, some of the constraints or some of the reasons why RBI had refrained from allowing banks to do this before was they wanted capital to be used for more productive measures, less so for one promoter acquiring and expanding an existing facility. What do you think has changed to prompt this kind of a move, and how does it benefit the banking system?
No, we are now witnessing a good quality balance sheets, both on the corporate side as well as on the bank side, right? We've been talking about twin balance sheet advantage for the last 4 to 5 years in terms of how the balance sheets have been cleaned up. That is number one. Number two, I think the allowing many of these elements, mergers and acquisition financing, is a confidence which is reposed in the Indian banking system. Ironically, which I've been presenting is that an Indian company acquiring an overseas company is permitted to be funded by overseas branch of India.
Not Indian banks.
Indian companies acquiring Indian companies, not to be funded by Indian banks, I think is a kind of an anomaly.
Except for IBC, that was the exception.
That was an exception. I think stretched asset funding was allowed. But allowing this kind of funding shows the confidence which the regulator has in the banking system. And I also mentioned in many forums that the large banks like SBI have the capability to assess this acquisition activities, and there are a lot of enablers now, and the data is available. It's not that the acquisition happens in thin air. I'm sure that we don't need to be unduly worried about any capital misallocation, number one. Number two, the risk misrepresentation.
Got that. But will it reverse that dip we saw in corporate loans from SBI? You have the 7 trillion pipeline, but is it getting converted? How soon before you get back to double-digit corporate growth?
So the corporates, again, as I mentioned, is not only in terms of the pipeline. Pipeline is strong, but many of them have taken the credit lines, have not been utilizing credit lines because they have very strong cash availability to them, and they're consuming that cash before the limits are utilized. But I believe that a lot of statutory, fiscal as well as regulatory measures which are now announced would be very, very positive for the corporate credit growth.
All right, we'll wait to hear, sir. Briefly, in terms of the second quarter specifically, the biggest challenge for banks is going to be maintaining their NIMs because the rate cut effect from RBI comes into play. Do you have enough levers to cushion the blow?
No, I still am holding the view that NIM trajectory, which we mentioned that it will be a U-shaped curve. I think with adequate liquidity available and the cost of deposits overall in the system coming down. I think the NIMs will be, exit NIM will be protected.
So you're already crossing 67 trillion of your loan book. You're more than 20% of the entire system advances or deposits. What is the aspiration? What is the big thing to look out for from SBI in the coming year?
The immediate thing would be that, if we really have to think about a milestone, we look at business levels, both on the deposit side as well as loans. If you combine, I think we would be reaching 100 lakh crores this year. That would be a big milestone for us. In terms of scale, I think is unprecedented scale.
Okay. So one last question, since I spoke to your former colleague, Mr. Prashant Kumar, yesterday, and that SMBC transaction now being concluded, you've made some handsome gains, but you still continue to hold on to more than 10% stake in Yes Bank. What are your thoughts on that? Would you want to keep it for much longer?
No, that's a call which we will take as we move forward. I think there's neither any compulsion to hold nor any compulsion to exit. So it's purely our call, and we'll take it appropriately.
Which is what we're asking you, sir. What is your call?
So now, at this juncture, we have not made any call on that yet.
All right. So finally, if I may ask you a last question, because it's IPO season, a whole host of companies going public from Tata Capital, to others. Your own companies in the pipeline, we've been hearing for a long time, mutual fund, asset management, general insurance.
They're still in the pipeline.
When, sir? When do we see you unlocking value?
We'll just see the evolution and evaluate the opportunity.
Not in the next calendar year?
Don't give any timeline on my behalf. I think let us keep it that way. Okay.
All right, sir. Thank you so much for your time. It's always a pleasure speaking with you. Thank you, sir.
Welcome back. You're still tuned into Trading Hours. Xavier Baraton, who's the Global Chief Investment Officer at HSBC Asset Management, is joining us now to discuss market fundamentals, global markets, emerging markets, and where does India stand in the overall investment thesis. Xavier, thank you so much for joining us today. There's so much happening globally. We are talking about tariffs. We are talking about inflation in some of the economies. We are talking about maybe growth slowing down somewhere. What's your sense? How are we especially looking at the US markets? Are the tariffs benefiting that economy?
Well, I think at the moment the tariff risk and the global uncertainty generally has been weighing on the US economy. I mean, we anticipate around 1.5% for the economic growth, so it's actually much lower than what we've experienced with the US economy over the past 5 years. By contrast, and it's a bit an inverted image, inflation is persistent and sticky, and it poses a particular challenge for the Fed, which is nonetheless on track for delivering a few more rate cuts after starting the easing cycle in September. So we expect 2 more cuts by the end of the year, another 2 or 3 next year, really. So from an investment standpoint and accepting we need to navigate these choppy seas with a lot of care, we still think it's pro-risk environment, generally speaking, but we're very targeted and selective in our allocations, really. Typically looking at markets on the stock markets where we see attractive valuations in particular. There are lots of pockets which start to be a little bit lofty from a valuation standpoint. I mean, we talk probably about the AI and the tech, I'm sure. So emerging markets is very interesting, compelling, we think, and it comes at a moment in time investors are really starting to shift after maybe more than a decade of US exceptionalism. So that's really how we're positioned at the moment.
So US pro-risk, but only in pockets, time to be selective, unlike the broad brush optimism or attractiveness, perhaps, of the market. But just coming back to India, India has been a high conviction market for you all, HSBC, and now you've been in India. I mean, what has been the key takeaway? Because the FI so far is still shunning India.
No, that's true, and I think it's been a mixed experience for a lot of investors over the past year. But for us, we've been long overweighting India in our portfolios, and for us the story is still very much valid from cyclical and structural. The structural, it's a combination of stable economic environment, stable government. We now have the GST reforms, the RERA. Of course, the tariff uncertainty has cast some doubts and probably has led investors to shy away, maybe pivoting. Some of them have pivoted to China as well, as we were seeing signs of improvement. But again, I think the structural factors are still very much there from a perspective. Valuations have adjusted, which is very good, really, because India was often perceived as a pretty pricey market. But now, if we look at the traditional indices, we are back to the long-term average versus other emerging countries. You're absolutely right that the FIs have been more cautious, but technically we think we are at very much the lower end in terms of underweight India, and we expect that risks are well priced in at this juncture, and we've reintroduced an overweight on Indian stocks. Fixed income is interesting as well. We should never forget the opportunities in bond markets. The 10-year yield at the moment, 6.5%, is really making sense. Currencies have depreciated, but in fact, again, it's a mechanical effect of the tariff uncertainty, which again is probably at the worst possible scenario at the moment in terms of pricing. So, again, possibly an opportunity.
I'll get to that China and the FII bit in just a bit. Xavier, stay on because we'll take a short break and we'll continue our conversation with Xavier Baraton of HSBC Asset Management on the other side. Stay tuned.
Welcome back. Well, continues to be a down day for the Nifty. It's a 60-point cut that we are looking at. The mid-caps down 283 points. Yes, the markets are off the day's low. But yes, there is some profit booking that continues to be the case. Nifty IT, that is batting for the bulls. But other than that, all the sectoral indices in the red. We'll take your leave on this edition of Trading Hour. But stay tuned. Halftime Report is up next with all the market action.